Hello guys, this is our new class about business, and in business today we are going to study borrowing from banks. There are different types of banks. Uh, One type of those banks are clearing banks. What does the clearing bank do? They actually clear the checks and their depositors and those people who deserve to be deposit. So here is the definition: operate the clearing system for settling payment, example payment by check by bank customers. A commercial bank that is part of a network of banks that can clear checks for its clients regardless of whether or not the checks originates from the same commercial bank. Clearing a check means processing it to the funds are deducted from the payer's account and put into the payer's account. What is retail and wholesale bank? Retail bank is the traditional bank, while wholesale bank are specialized in lending in large quantity to major share customers. And here is merchant banks, bank which offer service of a specialized nature to corporate customers, companies, etc. So this bank work as a merchant. As you can see, they work with companies and specialized nature to corporate customers and companies. And what is in our next slide? Function and activities of banks. These are the function and activities of banks. Provide a payment mechanism. Example, individuals, firm, government can make payment to each other. A source of currency, notes, and coins. This is also their function. It's a source of currency, notes, and coins. Provide a place for storing wealth in current accounts or deposit account. Lend money in the form of loans or overdraft. Act as financial intermediaries. Example, deposits surplus wealth and lend it to those that need to borrow. Means of providing obtaining foreign currency. Individual lending money. People lend money to someone if they are sure that they will be repaid with a reasonable time. They will be paid some interest for lending that money. Principles of lending by banks. What are the principles of lending from banks? Character of the lender, person or business. Track record of the borrower or past. Ability to repay. When the ability to pay, it means like bank is not gonna give to anyone money. They must have the ability to repay. Profits generated by the business to afford the interest and principal amount. Banks margin of interest, how much interest to charge to make a good deal. Purpose of loan, not for any source of illegal and to risky activity projects. Principles. What are the principles? Amount of loan, personal stake, amount of loan or personal stake. Banks prefer the customer to have a significant personal stake in whether the loan is for repayment terms, significant term, and condition clearly mention the date, amount, interest to be paid, penalty, interest, how much of each regular payment is of capital and interest. Security. A mortgage is needed as a security to be kept with the bank if the loan is not repaid. The security item will be deposit, repossessed. It's an insurance against non-payment. Why borrow? To purchase a business as a whole, to fund the purchase of fixed asset or capital finance, example, building car, etc., to fund day-to-day activities, working capital, or trading finance. Buying business. Circumstances in which a business might be bought. Totally new venture. 80% of all new small business fail within the first 5 years. Future opportunity prove to be supportive to new business. An expansion of an existing business. Good opportunity for expansions. Uh, retailer, a retailer buying warehouse. Yeah, buying continued. Some other circumstances are professional people seeking to set up and practice a management buyout, purchase as business from existing owners, purchase a franchise, capital finance, finance the purchase of a new fixed asset, to finance the purchase of a new fixed asset. Things like machines or premises. Loan matches the asset's life. Short-term financing, example, computer equipment. Long-term financing, example, factory machinery. Mortgage needed for long-term financing. Capital. All relevant cost of purchase must be included in the borrower's plan. Installation and testing cost, cost of any rebuilding, staff retaining cost, training finance. Day-to-day finance is a very common form of borrowing. Stocks take a long time to turn into cash. Suppliers must be paid in time. Bank provides an overdraft facility. Trading continue terms of a business. Overdraft are repayable on demand with review dates set every 12 months, or to increase the overdraft amount. Amount should uh, fluctuate between debit and credit. The debt balance not to exceed a, a certain level. Security. An overdraft is secured by a charge over, example, the right to um, possession of a business assets and trust calculated on daily basis. Retail banking, typical mass market banking in which individual customers use local branches of larger commercial banks. Service offered include savings in checking accounts, mortgage, personal loans, debts, credits, cars, and certificates of deposit series. Example: DIB by International Islamic Finance Forums.